Yep. Hello, everybody, and welcome to another episode of The Walkthrough. I am your host, Charvez Grant, also with my team lead slash co-host, the great Harlan Crumpler. And we have
Everyone.
how you doing? Yeah, and we have a guest on with you guys straight from Nation One Mortgage. This is one of my favorite lenders, a guy, Mark Foster. How you doing, Mark?
Yes, thanks for having me, Charvez. How are you?
Oh, I'm doing good, man. I'm doing really, really good. Having too much fun
Good.
these days.
That's it. That's it. We got a lot to talk about today. I'm excited.
We yes, we do. Yes, we do. And just so you know, so this is the walkthrough, and what we like to do here is we like to walk through the processes of, real estate transactions. We walk through homes. Today, we're going to be borrowing a little bit of your expertise so that we can walk through kind of like the application process and let our clients know, our future clients know exactly what they may need in order to, when they're in the middle of a real estate transaction, what you need from them. So, let's just start it off. Walk me through real quick. What are you looking for from an applicant when they first fill out an application? What are like three essential things that they need when they're submitting their application?
So we do a credit check. The credit report is good for 4 months. So typically it's a one-time check where we see where we're currently sitting. Getting into state programs, the Delaware State Housing Authority does have a minimum required score of 620. I think some people kind of may automatically disqualify themselves if they may have had a late in the past or may need some credit repair. But I would strongly urge to just look at the options. We can always run credit through different simulator tools that we have. And if we need to come up with a credit repair game plan that may take a month, 3 months, or even 6 months, and we can design a path there to move forward to get pre-approved. We're going to obviously look at income calculations for W-2 employees. We're going to be looking at pay stubs, W-2s, of course, and checking the stability of the income. I think another common misbelief is if you switch jobs or if you get a new job, start with a new company, that would automatically disqualify you, and that's not the case. We do look for a 2-year history, and these programs do require that as well. As long as you're currently working in your current role and you have a 2-year history behind you, it would be possible for you to use the state programs.
And when you say, just to elaborate, when you say the 2 year history, you mean 2 year consistent work history or income history?
Yep, and being a student actually also does count as the work history. So if you're coming right out of school and you're starting your new job, you would qualify for the loan.
Okay, that's good to know, especially for our college students out there.
Definitely.
Yeah, yeah. All right. So, you touched on this a little bit. When you said different programs. I know you mentioned DSHA, which is the Delaware State Housing Authority. Can you tell viewers just give them a little brief rundown of what down payment assist programs are available in Delaware as well as PA?
Definitely. So I tell people all the time, Delaware is a great state to be a first-time home buyer. We can get into the different benefits of that as well, but just to start with the programs, there are state, county, and citywide programs in Delaware. The most common that we use is, I already mentioned, the Delaware State Housing Authority, or DSHA. They have several different program options offering up to 5% down payment assistance, which is more than what your FHA down payment would be, so leaving you with minimal out of pocket. They have first time homebuyer programs and non first time homebuyer programs. So talking to a local lender and seeing what program would be a good fit for you is best. Like I said, there's usually something for everybody. They even have rehab loans. So if you're looking to start a project that may require some additional repairs, the Delaware State Housing Authority does offer 5% down payment assistance on those loan types as well. So I do think there's a certain program out there for everyone.
That's great.
Oh.
And Mark, what are the income cap?
Say it one more time, Harlan.
The income cap?
Yeah, so these programs do have income limits, I believe you asked.
Yes.
Mm-hmm. Income caps. Yep.
Yep. So they're going to be different in Newcastle County in comparison to Kent and Sussex. Newcastle's limits are a little bit higher. For a 1 to 2 person household, those income limits are 122,700, and if you have 3 or more people in your household, the income limit there is $141,105 per
Wow.
year.
Okay.
Yeah.
Mm,
So it's a lot higher
okay.
than people think. I think,
Right.
and another thing too, I just want to mention DSHA recently made a change to where they're no longer looking at household income. So, for example, if a husband and wife wanted to purchase a home together and they could qualify in just one of the names, then the other household member's income is not considered. So, as long as that one individual applicant doesn't make over, say, 141,000 with a three-person household, they would be eligible for that program.
That's awesome.
Yeah, definitely.
Yeah, yeah. And you also said now you said these down payment assistance programs are for first time. Are they only for first time home buyers or?
Common misbelief. They are not. They have non first time homebuyer programs and then first time homebuyer programs. What DSHA considers to be a first time homebuyer is that you have not had ownership interest in your primary residence in the last 3 years. So let's say you owned a house 5 years ago. In the eyes of DSHA, you are again eligible for their Welcome Home first time homebuyer programs. Just to throw out there, those rates too are below market. So you could even get 4 or 5% down payment assistance with a first-time home buyer interest rate that would be lower than what you would find on the market, which is a great deal.
That's a very,
Absolutely.
very great deal. You might have touched on this a little bit. I'm just going to ask you to elaborate. There was a difference in being like, what would you say are the big differences between Pennsylvania and Delaware as far as like buying a home?
Pennsylvania, primarily, we would use the PHFA program. That's actually one of my favorites. I'm happy you asked about it. Just like with DSHA, their rates are below market for first-time home buyers. And so that allows you to take advantage of possibly having a low payment with what they offer is 5% of your purchase price in down payment assistance. So if you're buying a $300,000 house, you would get 15,000 off your closing costs and down payment. That's actually forgiven money as well. It forgives 10% each year, and at the end of year 10, it is fully forgiven. So everybody loves free money. That's a pretty good deal. Yeah, for sure. Um, DSHA's funds are actually they're borrowed. For just going back to Delaware, they are borrowed, 0% interest, and they're paid back essentially when you sell or refinance your home. Um, with the way property values increase, it may only be a year or two to where you have enough equity in the home to pay that money back if you were to say do a refinance. So
Okay.
Okay.
Okay, so that equity that's gained that goes towards paying back that loan.
exactly.
So, oh,
Yep.
okay,
Yep.
that's
It really
awesome.
helps first time home buyers, with who may have minimal out of pocket, get into their first home. Another thing you had asked what we look for. So credit profile is a really big thing. Keeping utilization low on credit cards actually boosts your score faster than most people think. Not closing accounts, but utilizing them responsibly and paying them down, keeping the balances low. With a strong credit profile, there may be additional options for assistance, such as seller assist or seller concessions, as we call it, where the seller may contribute towards some of your closing costs. And we have a really good chance of getting that approved. We do it all the time. I know we've helped both of you and your
Yeah.
clients get that in a
Yep.
place where it would be minimal out of pocket. So, one thing I would say is just never disqualify yourself, thinking that you're not ready. Like I said, everybody's situation is different. Everybody's path to home ownership might be different, but you really don't know where you stand until you make that first phone call. So.
Absolutely.
Nice.
So once they make the call, let me see if you can hear me. Once they make the call, what documents do you need?
You breaking up a little bit, Harlan. Did you say
What
what
She said
documents
documents?
once
do
they
you
made the
need?
call, what
Yeah.
documents do they need?
Yeah, so I think it would
Eh,
depend on the type of income. So if we're looking at a W-2 borrower, we're going to get pay
mhm.
stubs and W-2s. Also, like to verify assets as well. When I do a pre-approval, I do a full pre-approval, including an automated underwriting check, to make sure that we don't have any hiccups down the road. If I tell you that you're approved for a certain amount, you are ready to shop for that amount. There's going to be no questions or any surprises of anything that comes up. But to answer your question, W-2 employees, we would just get your two most recent pay stubs, a couple years W-2s if you have them available, just to show that consistency and stability with the income. And we're right on our way. It does not take long to get pre-approved.
Awesome.
So just to get that right, if anybody's been taking notes, that's two most recent pay stubs and your most recent
W-2s.
W-2s for the past two
Yep.
years.
Yep, of
Yep.
course, if you're
Okay.
self-employed, we'll be getting tax returns and business bank statements if need be. But I think everybody's situation is different. But just in general, pre-approval, we're looking at pay stubs and W-2s.
Awesome.
Okay.
Okay. Okay.
All right. So speaking of that, right? Speaking of, everybody getting their documents together, we know that purchasing a house can be a long process, and there's things that you want to avoid even in getting ready to. What would you say are some things that you want to avoid if you're looking to purchase a home in the next 6 to 12 months?
Right. So obviously, keeping your eyes on the prize is always best. Maintaining positive financial habits, saving money, like I mentioned before, keeping utilization on debts low. And I think, for lack of a better word, I tell people sometimes to just keep things boring. Go
Mm,
work your 40 hours if they're available to you, if not more. Save money. You don't want to go buy a new truck or new jet ski if you're in the process of buying a home. I've seen that. It can
okay.
certainly change things as you go through the process, but keeping your eyes on the prize, saving money, and just showing good financial responsibility will put you in a good spot faster than you think.
Okay, okay. So no crazy spending, no opening any new accounts, and the accounts that you have, keep those low so that basically it just looks like you're responsible with your money. And would you say like lenders and banks are just looking to verify that you will be able to pay off this mortgage when they're looking at your financial situation?
Exactly.
If I
Yeah,
guess,
credit's important. It
okay.
shows, it paints a really clear picture, um, of what we're looking at. But I don't think any credit would disqualify anyone. There's never credit that's too far gone that it can't be fixed. I look at it as like Bruce credit. Anything. Like I said, everybody's path could be different. It could be a month plan to get you where you got to be. It could be 3 months. I would say some of my best experiences with helping first-time home buyers are those ones where maybe it takes a little bit more time. We kind of work together as a team. I know you both have been there alongside with me as well as we help clients kind of get
Yes.
themselves in better position, right?
Mm-hmm.
And they come out better because of that, right? They learned a lot, um, and they got themselves now in a spot where they can be comfortable and say that they're a homeowner.
Okay.
Yep.
Good. Yeah, yeah, we have,
Yeah.
and that's a we were talking in one of our previous episodes on how that's one of the most rewarding parts of the job. Um, just I do have some more questions here, but I want to kind of like um dig a little bit more into your background, if you don't mind. Like,
All
can you
right, let's
tell us
do
like
it.
what? Yeah, good. What made you kind of want to get into this industry? With yours, with your field, with you specifically do with lending.
Uh, yeah, good question. So I've lived in Delaware my whole life, born and raised in Newcastle County. I attended the University of Delaware. Have a
Mm-hmm.
banking background, which kind of got me into the lending side of things, which led me where I am today. I've been with Nation One for 3 years, been doing loan originating for six. Um, and like you had mentioned earlier, seeing somebody with keys in their hands is it's a really it's a really gratifying thing to know that you kind of helped them there, that you educated them along the way. Um, we're local here in Delaware, and you may get connected with a loan officer who would be great, who could give you information about the loan types and the loan products. But I would really recommend speaking with a lender who's local, who
Mm-hmm.
specializes in local programs and different breaks and exemptions that the buyer may be eligible for. I'll mention one now if while I can here. So typically in Delaware, as a buyer, you pay 2% transfer taxes, which are really the majority of your closing costs. And being a first-time home buyer in Delaware, your county is fully exempt up to 400,000, and the state portion is discounted at 0.5%. So using these state programs along with that exemption, being a first-time home buyer, you really make sure that the buyer is utilizing all of the resources and benefits that they can as a first-time home buyer. So I would suggest, talking to a local lender and seeing somebody who specializes and works with those programs every day so that they can offer the best product for you.
Okay.
Yeah.
And what were you gonna say? I'm sorry.
I'm sorry. What counties don't offer that discount?
Say it one more time, Harlan. I think you.
Are there any counties that don't offer the discount? I'm talking in
Not
general.
counties as a whole. There's certain pockets of areas that are what we call incorporated, and certain municipalities like the city of Newark, some certain areas, Old Newcastle, Ellesmere, certain pockets of Middletown and Smyrna, where that county portion may not be available to be exempt, but the state would be as a first-time home buyer with any purchase up to for the first 400,000. So I think a lot of people don't know that. With possibly, if you have a great credit profile, you're utilizing these state programs, you're getting these first-time home buyer breaks on your transfer taxes. It can really make it affordable, more affordable than some people may think.
Absolutely.
Yeah, yeah. I mean, you said 2%. So if we're talking about a house that's like 350,000, that's like saving $7,000 off of your closing costs,
Right.
right?
Yep. So the county in that example you just mentioned, that's less than 400,000. So there would be no county transfer tax, and the state would be discounted a 0.5%. So it would be very, very minimal. Um, I mentioned some of the programs that were state, county, and citywide. I just wanted to throw out there, if you're looking in the city of Wilmington, they also offer a program that can be used with the state program, which can make the cash to close little or next to nothing. So if you can take advantage of both of these programs, we can actually use them together. We've done that, Charvez, for a few of your clients as well.
Yeah.
So that's always a good option as well. If they're concerned with cash to close, we have different programs we can use together to make it minimal out of pocket. So it's always
Yeah.
good.
Yeah, hopefully we'll be using it for a couple more clients because I
Yes.
love to see clients come to the closing table and not have to spend any money, not have to
Yep.
spend as much
Yep.
money, right? Because we all know we need to hold on to as many dollars as we can, especially when we're making that move.
That's it.
Um,
Yep.
Now, you did speak on how, even when it comes to work history, it doesn't matter if you're a student. I have a couple of clients who are, and I'm sure I have more who have student loans and they want to know how student loans are calculated into their debt. If they're on a IBR, and if you could break that down and say, well, let our viewers know what that is
Yeah.
and how that
So
works.
we realize that people borrow money to go to school to kickstart their career path, and we wouldn't want that ever to disqualify someone from being able to purchase a home. Typically, we would use, if a loan were to be in deferment, meaning you're not making payments on it, we're only using 0.5% of the balance towards the debt to income ratio calculation. So
Hmm.
it's actually a smaller percentage than people think. You may feel like you're inundated with student debt, that you're trying to dig your way out, and you feel like you got to get those balances low before you can look into home ownership, and that's not really the case. You mentioned the IBR. Those are income based or income driven repayment plans, where a lot of the student loan companies, depending on how much you make, will essentially negotiate a payment that works best for you according to how much you make. Um, there's also fixed payment plans. I know that a lot of the deferment programs are now coming to an end. I believe as the end of August, I think you have to be in a different um, payment plan, but they do have fixed payment plans that are fair as well. I do recommend the income-based repayment one. A lot of the times with working with an associate there, they're able to come up with a good payment that keeps everybody happy. And that's the payment that we would essentially use when calculating the debt to income ratio.
Okay.
I hope that answers the question. Basically,
No,
it is not a make or break. We realize people do need to go to school, and they're currently paying their debt back, and we don't use a whole lot against them when calculating that.
okay. Okay. Um, Let me ask you this. This is just a fun, engaging question off the top. Like, you hear a lot of people talk about like interest rates. What's the wildest rate swing you've seen in your career, and like how did it impact the buyers?
Yeah, I think before COVID, we were at what we would call a normal, right? And then when COVID happened, the rates got really low, and the housing market kind of went berserk, if you will. Now we've
Yeah.
kind of started to see in the last couple of years that they're kind of coming back to what we call normal. Using these state programs as a first-time home buyer, like, they're far below market. Um, so as we continue to see the rates come down, um, using these programs is the way to go. You can also refinance these loans, like I mentioned. You're eligible to refinance it with no penalty 6 months after the closing date. So what I always tell people is, you marry the house and not the payment. The payment is temporary. you'll always be able to refinance to get that payment lower in the future. But as we talked about before, housing prices continue to go up, so it's better to be on the ownership side of that than trying to be as they do increase. Gaining equity in the home puts you just in a better financial situation so that you can make a move in the future.
Okay. Okay. Nice. And I've always thought about this. So say like what the say the interest rates drop to nationally, like to like 4%. Are you saying like these first time home buyer programs, combined with their incentives, they would be even lower than that, or would they kind of just compete? What do you think?
So the DSHA will always keep their rates. They do follow the market. The market may move throughout the day. We may see
Okay.
rates move throughout the day. The DSHA doesn't move their rates all that much. They try to park their rates below par, meaning that
Okay.
if you were to go get a regular FHA loan, DSHA is going to be lower in most cases with that first-time home buyer programs and benefits. They do also have the non-first time home buyer programs as well. So even if you own property and you just sold and you're looking to get into a new one and you still needed down payment assistance, they do have different programs set for that. Those are called the open door programs.
Open door.
So yeah, they always try to stay below the market.
Okay.
So
All right.
if we go down to four, I'll be one happy camper, and I think a lot of other people would be too. And
Yeah.
at that
Yeah.
point, it would be great to refinance and knock a few $100s off your payment.
Right. Right. Absolutely. Absolutely. I'll be looking forward to that as well.
Yes.
Speaking about, mortgages and loans, what's one myth about mortgages that you wish buyers would stop believing forever?
That you have to have thousands and thousands saved up, that you have to have a perfect credit score. And like I've been kind of saying, that every
Hmm.
person's path to home ownership is different. There's a different program out there for every buyer, I believe. And if it may not be ready for you today, it can be tomorrow. We have a lot of different tools with credit that we use where if somebody feels like they're too far low with the score or they're unsavable, it's not the case. There's always a path forward and there's always a way to fix credit and get yourself in a better spot.
Hmm.
So
Hmm. I love. Yeah, you just gotta ask the questions. I love that you said that because there's been a lot of first time home buyers. They just can't get over that hump because they believe they gotta have like 20,000 down and all these other things that they hear. But it's great to just sit back and talk to a professional who can actually look at your situation and be able to assess. So I love that you elaborated on that. All right, this is a little off kilter, but like, what's the so we know you need, actual documents when it comes to proving income. What's the most unexpected thing someone has tried to use as proof of income, like the craziest thing you've seen?
I've seen a lot. Craziest thing I've seen for someone trying to prove income. Oh man, that's a tough one. Um, uh,
I know you can't give out
you know,
no-
I,
you can't give out specific information, so.
right, that makes it tough. I've seen it all.
All right,
Maybe writing down on a piece of paper, I make 100,000 a year. Yeah, basically. Um, personal checks. Yeah, you name it. But
personal checks.
yeah. So
Okay,
I've seen. Um, yeah. Again,
that's that.
I think people think that they need to be at their job for a certain amount of years, and basically, again, we're looking for a history. I think with mortgage lending, those two words I mentioned before, consistency and stability, are everything. Obviously, the longer you've been at your job, it shows that you're there and you're progressing, and that you're able to maintain it. So even if you did switch, say your company closed and you had to go to a new company, I know Harlan, you've worked with a lot of nurses who were at one hospital that may have closed and had to go to a different. That would not disqualify anybody at all from being able to get a loan. We're just looking that you are working, not necessarily even in your field. It may be a completely different job. That's another misconception is people think, all right, I was in this line of work and I wanted to try something different. Now I have to wait 2 years. You do not. Just showing that history of work and that you are able to work and maintain your full-time employment is really what we're looking for. So,
So is it like an income level? Like say I have 2 years consistent work history, but in my new job, they're not paying me as much as my old job. Like how about
Yeah, we're going to go off the current calculation and projections on what you're making currently and what you're set to make moving forward. Hopefully the other way around. Hopefully you're leaving and you're going to a new
Mhm.
job with more money. And then to answer your
Yeah,
question too, yeah, we'd be
absolutely.
using that calculation as well. Um,
Okay.
so
And in a situation where it's a new job and I'm making more money, how much work history do I have to show there, or is it still just the most recent pay stubs?
2 years. If you say you've been at your company for 10 years and you just want to try something different and you go to another company, whether you're doing the same thing or something else, you are eligible. You have that 2 year work history behind you. And like I mentioned before, if you're a student, you're coming out of a university and you just started working, you're working to repay those student loans and you're looking for, getting into your first starter home, go for it. Absolutely. That stuff will not disqualify you. Being a student counts as employment history in our eyes. So as long as you're in your field now and you're starting to work and we can source your income, you're going to be good to go.
Nice. Nice. Is there back to the myth thing, is there anything about credit that actually helps consumers that they may think hurts them or vice versa?
Yeah, I mentioned before, closing out accounts. If you do have some cards, and we like to use them for the points, we like to use them to get the sales and everything. Just use them and pay them like normal. Sometimes keeping a small balance on the card, using it responsibly, and paying it at the end of the month will really help your credit score. It's when you keep your utilization on those cards. If your credit limit is say 3,000, and you constantly keep that payment around 3,000, you'll start to see your credit score drop. Keeping that balance low shows the responsibility that you have, that you're able to afford what you're paying for on that card, and that you make the payment on time. And if you do that, you're going to continue to see your score increase. But I think a common misbelief is that closing accounts out will help your credit score. It actually doesn't. Keeping them open,
Mm,
using them responsibly does.
okay.
Yeah.
That's good because I know I've heard a lot of times growing up, stay away from credit cards, don't get a credit card. And it's like it's not the credit card that's the problem, it's your spending habits that may be what's holding you back. So thank you. Thank you for articulating on that. Yeah.
These are all tools that
I'm
we have. I mean, that those tools are there for you to use responsibly. So, like I said, you do hear that if you let the credit card get higher and higher and you're paying interest, it can hurt you financially. But using it responsibly can also help too. So, just like most things, it's how it's used.
okay. Okay. All right. Now, I know you're gonna try to give like a democratic answer, but like when it comes to pet peeves, what's a tiny thing that applicants do that drives lenders crazy? But you, of course, still love them for it, but like,
Of course,
what's
yeah.
one thing?
Um, I think I mentioned it before about maybe going to buy a new truck or a new jet ski. Now, a lot of people, like I said, nothing wrong with making those purchases if you can do it. But if you're really looking towards home ownership, like I said before, you kind of want to keep your eyes on the prize and keeping that the main focus. Um, I would say maybe if you're trying to buy some furniture, maybe opening a new account before closing. We usually calculate those debt to income ratios perfectly. So one little thing like that, opening a new account, it could really throw things off. So as far as pet peeves go, I would say that's the just communicating that with the borrower. They may not know that. They may think that they're
Hmm.
they're getting some furniture for their new house, that the loan may already be conditionally approved. But you really just want to maintain that consistency. And like I said before, you kind of want to keep things boring as you're going through the process. Work and
Keep
save
things
money to
boring.
get there. Yeah, yep. It's your best bet.
Nice. Okay. Okay. And now, and I hope I didn't ask you this or a version of this, but I always like to ask, what is it about you, that you think separates you and Nation One? Because, I go to you guys for everything, but
Yeah.
what is it about you guys that you think separates you from maybe another lender out there?
Yeah, thanks again for asking that. It's a good question. I pride myself on availability. I think for a lot
Mm-hmm.
of first time home buyers, like we talked about before, they might be nervous. They might have questions. They might need a little, for lack of a better word, maybe a little hand holding. Explain this to me, educate me. And that's what I like to pride myself on. I don't care how long it takes, or how long we may have to even answer the same question multiple times. but just being able to be available to them days, nights, weekends, when something may come up where they may have a question or they want to go look at a house on a weekend. I pride myself on being available to those people because I owe that to them. A lot of people, when they get off work on Friday and they're shopping for a home, the weekend might be the busiest time. You know that, right? You guys are
Mm-hmm.
always working on the weekend. So just being
Yep.
available and having the patience to help a first time home buyer with questions that they may have, thoroughly explaining everything to them and making sure that they understand the process and understand the steps that go through. I try to make things as easy as I can for them, take it one step at a time. And I've heard great feedback from my clients as well that I made it easy for them. We do all the applications on your behalf for these down payment assistance programs. So we're the liaison between the buyer and the program. A lot of them will require they take a first-time homebuyer counseling course, which I would really recommend to anyone who's even thinking about looking to get into it. It talks about the do's and don'ts, some of which we talked about today, how to get yourself in the best position to purchase a home, and just kind of understanding the process. Um, that's when your home ownership path really starts. Is when you reach out and you get that education and you start asking those questions. And I pride myself on being available to do that. So.
Okay. All
Yeah,
right. And with that being said, because I can testify that you are available. You always do. I know if I don't hear from you right away, you will get back to me, and
for
my
sure.
clients feel the same. So with that being said, why don't you just take a little time out to let people know how they can get in touch with you? How they can
Yeah.
reach out, how they can fill out the application.
Absolutely, absolutely. I'd be glad to. So I have my application link, which Harlan and Chavez. I don't know if you have something you can provide for them to see,
Absolutely.
but I'd be glad to provide my cell phone number personally. So if you wanted to reach out and just introduce yourself, have some, have some chatting time, ask any questions maybe you were thinking about asking, please feel free to reach out. I can provide my cell phone and my link directly to our website if you want to learn more about Nation One. And also to these state programs, I can offer those links as well if you wanted to read up and get your information together on those. But yeah, I'd be glad to provide my contact information so that if you'd like to reach out to me, we can have that conversation.
Okay.
Okay,
Okay.
that was great. I'll definitely post the link
Yes,
with the video.
perfect. Yes,
Yeah.
feel free to add my cell phone on there as well. I'd be glad to chat.
Absolutely. And you did mention a homeowners course. Is that course online for people to check out?
Yeah, so there's multiple. There's a free one as well that you could take. You'll go through the modules. It'll teach you everything you need to know from starting out the application all the way to when you get to the closing table and everything in between. Um, there's also, they will actually be required for the first time home buyer state programs if your FICO score is between a 620 and a 660. If you're over a 660, you actually aren't required to take the course. It is, of course, encouraged, but you aren't required to do so. But there's a lot of good information in those courses about not only buying the house, but maintaining it and what it kind of means to be a homeowner.
Mm.
Awesome.
Yeah. All
And I
good
can provide
information.
those links as well.
Yes, please, please. All the information we can get so we can give it out and educate everybody.
That's it.
Um, that's right. That's right. So I think that's all we pretty
Yeah,
much have today.
yeah,
Yeah.
that's it. Thanks so
Um,
much, Mark.
Thank you both so much for having me. It was fun. And like I
no,
said, if
no.
I could be of any help, you guys just let me know.
Oh, we definitely will. So, we'll be reaching out to you as people reach out to us, which I know they'll be reaching out to us after this. So if you
That's
go
it.
viral pretty soon,
All
it's
right.
not our fault. It's thanks to your expertise. But guys, thank you for tuning in to another episode of The Walkthrough. Make sure you like, comment, share, and subscribe. And we will see you again soon.
Thank you
All
all.
right. Thanks.
Have a
Bye
good day.
Bye-bye.
Bye bye.
bye.